So the first presentation is, so Vinny's going to talk to us about ideas. He has made his ideas into companies. So that's what we're here for. And hopefully today you don't let your ideas die, but take them to the next level. And so I'm going to turn it over to him. You got it.
I got it. Thanks. Hi, guys. So I'm Vinny, and you could probably tell from my strange accent, I'm not from around here. Originally from South Africa. I've been living in the Bay Area for about 4 years now. I've built companies on both sides, so in Cape Town and San Francisco, and I'm now working on my third startup. My first startup was going back 2003. It's a search engine marketing business. Back in 2003, Google had just launched a lot of the tools and functionality you see in AdWords today. We had built that 10 years ago, 8 years ago, and we had licensed it out to companies like Walmart and Expedia and Zappos, etc. We specifically focused on very large keyword data sets. So you would take Walmart's inventory of items that they're selling on Walmart.com. We'd index the items. We'd create keywords around that. We're talking like hundreds of millions of keywords, and then loading it into Google and managing the search campaigns. So that was the first business I got involved in. At the end of 2007, I had this idea, which was sort of something we were building inside the previous company, a way to get websites up and running, faster, quicker, more easier. Back in 2007, we saw the trend of small businesses moving to the web quite aggressively, and put together a business plan, started a company which is now called Yola. It was originally called Synthesite, synthesizing a website, and this is a bad name because no one can spell it. And we had lots of C's and lots of Y's and S's, and so we renamed to Yola. We bought the 4-letter domain. In 2009, we renamed there. But so that was a project that was in-house. It was an idea. It was something which we saw the future of the web being. It's applications moving to the web, cloud-based hosting. Ray Ozzie at the time was arguing the opposite, so we knew we were right. He believed that web apps wouldn't happen in the next 5 years, and it's desktop apps and etc. So it was sort of contrarian I think in 2006 and 2007 to think like that. I think Salesforce back then was still a small company, and no one really believed in SaaS. And a lot's changed since then. So we raised $5 million, so from Cape Town, and we moved all the way to Silicon Valley, myself and 4 other people, to move our offices over here, headquartered now in Jackson Square. We moved into Soma first. And it was a quite interesting journey of taking an idea and then building the prototype, going to dozens of investors. Typically, no one sees the world as you see it when you have this idea, because it's not really formed and you don't have any traction. And we only had 10,000 users signing up, and back then we were using those sorts of vanity metrics to try and get attention. And no one really saw the gap in the market. For those who don't understand what Yola is, it's like Microsoft front page for the web, but a lot more easier to use. And that's how we compared it back then. FrontPage and Dreamweaver were our competitors. We try to make it really easy for people to use it and build websites for themselves and their small businesses. So I must have knocked on about 25 doors to try and get funding before I eventually got the $5 million in A-round financing. And it's quite funny, if I stopped at like 2022, I wouldn't have gotten there. So when you have this idea and you're trying to get people to buy into it, you've got to just keep pushing forward until someone actually gets it. And there are people who get it. And sometimes it's not just them getting it, it's the market. Your concept gets closer to being something real. Every month that goes by, we had a small team, we were building code, the product was getting better, and then the market was getting more in tuned and getting more direction to where your industry would be going. And eventually, eventually we got the financing. I know I'm supposed to speak about the idea side of things. I'll try and stick to that, but there's obviously some parallels and intersections with other parts of building a company. So anyway, we moved Yola to Silicon Valley and built it out here. We got 1 million users in 2008, so our first year, and became very popular, very successful. And from the product side of things, we hadn't started monetizing it just yet. And we raised about $20 million at the end of 2008 as the market was collapsing. So that was interesting. We just piled in as much cash as possible because we were heading for the nuclear winter, so to speak, of 2009. But things have gotten better in the market. So a couple of lessons I've learned around the idea is try and match your funding with the stage that your idea is in. I think, in retrospect, we probably raised too much money because the product hadn't come far enough along to take that much money. So when we were raising from the venture capitalists, there was just too much pressure to sort of use it and build out a team and build out a business, as opposed to just focusing on product development. So it was a little bit difficult also moving continents and countries and moving people and splitting teams. But so when you're trying to get your idea, you should just raise. So I'm doing another startup right now after 5 years with Yola. I'm no longer the CEO. I'm just on the board and executive vice chairman. I've got a new startup. It hasn't been named yet. Still trying to buy the domain from a squatter. It's the usual problems all of you probably have. They want $10,000. You try to negotiate it down. It's like, we're a startup. We don't care. Okay. I'm going through a lot of these motions again, and one thing I've realized is this time around, I'm just going to raise a whole lot less money because I think, although I'd say we were metrics-based a couple of years ago, my thinking was metrics-based, it's even more so right now. So taking the idea and then testing a lot of the assumptions around the idea. I'm moving into the mobile/social vouchering space. So gift vouchers online and through mobile phones and social networks, and there's a lot of the gift voucher industry is a $100 billion industry in the U.S. alone, and there's tons of legal issues around breakage, etc. by states. It's quite a difficult thing for a small business owner to get into and issue vouchers. So we're going to try and put out a vouchering platform for them. But so as I'm going through the thought process around taking this idea. Important thing is speaking to customers or potential customers who, understanding, understanding that your idea isn't really it's amorphous. I mean, most startup ideas are amorphous in the first year or two. You've got this concept, the industry you're going after, and you really want to then test assumptions and build out a product that matches what the market need is, and that obviously is going to be a business at some point. Speaking to potential customers is, I think, the number one thing I've learned from my experiences. When we built out the Yola platform or synthesizer was, we initially thought that the target audience would be affiliate marketers, because at that point, in 07 and 06 and 05, they were the ones pushing out the most websites. They were building tons of websites, marketing for eBay, marketing for Commission Junction, all the affiliate, SEO was big. And pay-per-click was very popular. It was cheap traffic back then. But then what we did with the idea is we actually went to Commission Junction. They emailed, I think, 50 of their top affiliates, the top 50 affiliates. And these are the guys who represent most of the money in the industry. So in any industry, you get this 80-20 rule. Even more so in the affiliate marketing industry. There's definitely, I'd say 80% of the revenue in that industry. Well, I don't know what it is right now, but back then went to the top 20% affiliates. And of that 20%, 80-20 again, with the top 50 or so. And the feedback we got back on the product was, look, this is a great product. We could easily build websites. The idea is sound, and then it was just a prototype. But the guys are never going to pay us to use it. Those top 50 affiliates, they're never going to share their commissions with us, and it's just too small a market. And those guys are so good that they would just build their own tech. So then we realized that wasn't a good target market. So we went back to the drawing board and we actually rebuilt the product from scratch after putting, I'd say, a year's worth of R&D or 18 months worth of R&D and a lot of like 12 devs on it at one point in time trying to develop the product. We just went back from scratch, and we went down to 3 guys coding a new product, easy to use, but for a specific target audience, which was the small business and non-technical user, and help them get a website together. So, we weren't afraid to sort of break down what we had already built and rebuild it. We did lose a lot of time and we lost a lot of momentum, but it was the best thing we ever did as a company, because we realized that as the idea formed, it didn't match a market need, and we had to basically reinvent the company at that point to get it to into a bigger, wider market, which could actually be fundable. Because ultimately, it's good having a great idea and a great product, and you get the 1 or 2% of the companies who are lucky enough to get money for a product that isn't really going to be a business one day, and then hopefully it does. But most, when you take a practical approach, if you want to go for a percentage play to get funding, you've got to put together a product that's going to be fundable. if you want to get it funded. Yeah, the second point around that is sometimes you don't want to get more than angel funding. A lot of companies I know get angel funding. They get to a certain point where the business is profitable, and then they don't go for the VC. So VC isn't necessarily what you want to be doing, because there's heavy dilution, loss of control of your company. There's a whole list of things you guys can Google online. But taking your idea to a company, and a big company, isn't necessarily what you might have planned. So I often tell entrepreneurs, young entrepreneurs, I've invested in a couple of guys straight out of school, and I tell them, I asked them the question. I said, "What do you want to do with your company? What is your goal? Are you trying to build $1 billion business? Are you trying to just avoid working in a corporate? Are you trying to have a nice lifestyle business? What is your
Vinny,
goal?"
do you mind if we ask around what people?
Yeah.
So, who wants to build a billion-dollar business? Billion-dollar business? No, seriously. Okay. All right. And what was the other one?
And who wants a lifestyle company? Who wants a business that just makes profits and low risk and low stress? Okay.
The time between when you came up with the original idea and how you iterated, pivoted, and when the time came when you're like, okay, maybe this is not the best idea, but that's the one that works. Like, how did you discover that moment when you figured your idea works?
It was so when we discovered it actually works. Look, we knew we were on the wrong track when we did the 80-20 calculation on the affiliate market versus the small business market. When we realized it actually works, I suppose when we opened up the alpha and eventually got to beta and people started using it, publishing websites, and we saw the results. We would sit and every time a website gets published, we get an email in our inbox and we can see what website people built. And it's a really fun part of a startup is when your first customers start using it, you're seeing all these emails coming through, notifications, and it's tons of fun. And then you see where people are falling off. You look at the finals, you say, hang on, people get to this point and they're not getting through and they're not using the product. So there's a great product out there called Kissmetrics. You guys should use it. That wasn't around 5 years ago. I would have loved to be using that type of product to analyze user flows and funnels. But yeah, just watching users actually use and be productive with whatever you build.
And when you saw that users are signing up, were you like, oh, we got to make the idea better, or were you just trying to support the growth?
Both. I mean, the one thing so we had a good ops team, and they're always under pressure. We've got 25 to 30 million uniques a month. And growing, so it's a lot of just supporting growth, and then product. I mean, the other thing is as you get your team bigger, it's different opinions, right? Everyone's take the product in a different direction. This is what we should be doing, and you can run the company by being a sort of autocratic and saying this is how it's done, but then you also lose people, and you lose good people who want to be heard, and it's difficult to find that balance. And I don't think I speak to tons of CEOs. No one ever finds the right balance there, and you can't please everyone all the time. So you're always going to be putting someone else's nose out of joint. I think Steve Jobs did that the best, right? and he did well. But it's not not everyone can be like Steve Jobs. We don't all have a cult of followers. They'll just keep walking towards us and getting we smack them down. They'll keep walking, and we don't have that. We don't have zombie employees. There's tons of competition out there for employees right now. If you're nasty to an employee or you don't treat them with respect, they'll just go work for someone else, and you'll lose them. Apple didn't have that problem, did they?
Just curious, what's the equivalent of 20,000 in South Africa with
dollars?
Yeah.
Well, that's a difficult question.
It was like you were barely making it, but you said you
No. I mean, in South Africa back then, in 2003, $20,000 was an exchange rate was like 8 to 1. So it's about the same exchange rate as now. It's 160,000 rand, and you could buy my apartment that I sold was 450. So it was $60,000 for a nice like condo. So I mean, the funny thing is people don't understand. You go to South Africa, you're going to feel poor in Cape Town, for example, because it's just so expensive. Food there is more expensive than San Francisco. A lot of things are more expensive. It's about parity, I'd say. It depends on the exchange rate is any given day. But it's about the same as living in Silicon Valley, except property is obviously a lot more expensive, yeah.